Let's get cracking. Welcome. Okay, let's have a look at the market update for Australia and New Zealand. Okay, so Australia, Sydney grew 1% for the month, 2.5 for the quarter, 7.3 for the year. So Sydney, I mean, it's just an unbelievable place. The property market is so incredibly buoyant there. Even the downturn, they were downturned for like 6 to 12 months and bang, they're up again. It's amazing. Melbourne, 0.4 for the month, 1.3 for the quarter, and 1.4 for the year. Even Brisbane's bounced back phenomenally. 1.3 for the month, 3.9 for the quarter, and 5% growth for the year, the last 12 months. Adelaide, very similar, 1.7435%. And Perth, little old Perth, 1.3 for the month, 3.6 for the quarter, and 8.8 growth for the last 12 months, which is absolutely mental. That's the biggest growth that we've seen for a very, very long time. So I think we can all sort of breathe a sigh of relief and say, wow, okay, we have now seen some significant growth. And I think that has increased like 4% in the last month, 4.3%. So that's massive. Sorry, the last quarter. So that's massive for us Perthians. And we'll talk about how we go about marketing that now, because obviously when the market pings and we've got a shortage of stock, we've got to start planting the seed that they should cash in, because it might not hang around a lot longer. So get them to cash in so that we get a flood of stock to the market. That's what makes the market turn. We'll talk about that a bit later. All right. Let's do a quick snapshot on the property market so let's just look quickly at combined capital cities, 9% for the month, 2.5 for the quarter, 5.1 for the year. Combined regional, 0.4, 1.1, and 0.4. So for the 12 months. So as we can see, once again, the cycle has shifted from regional being leading the way back to the major cities, and regional kind of pulling back. They kind of work in opposites, or at least regional tends to follow the capital cities. So the cycle just seems to be starting all over again, the way it did 3 or 4 years ago. But obviously with prices and sort of interest rates the way they are, we may not see the heights that we did see 2 or 3 years ago. But hey, let's ride the wave and make hay while the sun is shining, as it has been for quite some time for Perthians, which is great. Okay. National index is 0.8. So this is kind of a more reality check on the whole country. 0.8 for the month, which is an increase, but not significant. 2.2 for the quarter, which I think is significant. And 3.9 for the past 12 months, which is significant. Average median house price, $740,000 throughout the whole of Australia, and 1.1 in Sydney, I might add, and around 7.5. And Perth has increased to $618,000 average house price, which we've never seen before, I don't think. Stand to be corrected, but I don't think we've seen $618,000 average house price in Perth. So that's pretty cool. Okay, so let's break it down. Australia's housing recovery remains entrenched, with national dwelling values only 1.3 off record highs. So that pretty much answers that. Capital city values are 7.4 higher over the first 9 months of the year, and regional values are only 2.6 higher, respectively. With values likely to rise further over the coming months, more regions are set to post a nominal recovery in home values before the end of the year. Of 87 regions nationally, 27 are already back to record highs, and a further 16 are only 2% away from the record highs, while some sectors of the economy will be applauding higher housing values as a sign of increased wealth. Non-home owners will be increasingly frustrated and affordability constraints worsen from both a purchasing and rental perspective. Yeah, it's a real sad story for people trying to buy and rent. And we'll talk about that perhaps in Mastermind and how we can be empathetic. Write that down. How can we be empathetic as real estate agents and not look like property moguls? Let's write that down as something to talk about. CoreLogic's latest national affordability metrics to June this year show the ratio of dwelling values to housing income 7.4 and the time it takes to save a deposit 9.9 years. Is once again rising, and a household income dedicated to serving a new mortgage is approaching a new record of 45.5%. I've got an 81-year-old dad living with me. And when I tell him, because he's interested in the property market, he's quite smart. His memory's not fantastic, but he's very curious. He's always asking questions, which is very cool. I hope I'm like him at 81. But he wants to know how people are affording these high prices. And it's hard to explain to him how they are. But seeing that, last time I told him, I said it's about like 1/3 to maybe a bit more of your wages that will be going to the mortgage. It's now 45.5% of people's income is going towards their mortgage. It's frightening. As in the position of income dedicated to paying rent, which is 31.4%. These are really, really diabolical situations. But we are not responsible for this. We are facilitators of this, and we've got to be able to manage this for our people. And I heard something very good on the radio the other day. There was a lady speaking, can't remember her name, but she was brilliant. And she said, we need to encourage homeowners and buyers to buy within their means. They will get the white picket fence with the 600 square meter block or the $1 million apartment, but they may have to start at a $500,000 apartment and a 350 to 400 square meter home a little bit further out in the city. They need to be realistic because that's causing problems. The outlook for housing values remains positive, albeit some risks of slowdown. Advertised supply levels are arguably the most important facet of the market to watch over the coming months, as acceleration is in the flow of new listings is normal feature of spring and early summer. However, if this trend continues, we are likely to see buyers benefiting from more choice, less urgency, and greater leverage to negotiate. A lift in advertising supply isn't likely to be met with material lift in purchase activity. Households are still doing it tough, and high cost of living pressures are high, and interest rates are high. Economic conditions are softer, and labor markets are set to loosen further. A housing undersupply looks set to worsen before it gets any better. Annual dwelling approvals haven't been this low since 2013, apart from the dip in 2020 caused by COVID. Against the backdrop of record population growth, that is a forecast to remain at above average levels over the next 5 years. We're yet to see any early signs of supply response. Federal and state policy initiatives focused on incentivizing supply as well are well placed, but high costs and scarcity of trades remain a key challenge to deliver more housing supply. While an undersupply of housing is clearly negative, insufficient levels of housing are likely to support housing values over the medium term. That's a bit of a snapshot of the Australian property market. We're in an upswing, folks. It is loud and clear. We'll get to questions in a minute, but we're in an absolute upswing. Let's have a look at questions. Where are they? Chat. Where's chat on this? It's got it. Oh, there's chat. Sorry, I got it. So is COVID going around? Yes, you're right, Jill. Is the income to mortgage for mortgage of Australia, WA, I think is around 31%. Is that income to mortgage for WA or that's I report this is Australia, Ashby. So WA would be different. So before we take on Daniel, I want to talk New Zealand because they are also showing lots of positive signs, and we've got New Zealand members, so we've got to make sure we keep our sort of coverage of New Zealand as well. So national property values flattened in Auckland, starts to grow again. So starts the growth cycle again. So Auckland, northern New Zealand obviously has been the part that has struggled with the recovery, but they are now flatlining, which means that they're set for some growth, which is good. So property across Aotearoa, New Zealand, flatline in September, most likely ending a 17-month downturn. So congratulations to anyone there. National average values stabilized at 905,000 in September, with the 3-month change sitting at 0.6 from March 2022's peak. And the total fall has been 13.2%, although average values remain 24.3% higher than pre-COVID in March 2022. Around the main centres, the wider Wellington area was flat in September, with Christchurch and Dunedin edging up by 0.2% apiece. Most notable main centre was Auckland, where values rose by 0.4%, so the city's first increase since March. It was only a matter of time until property values found their floor and then start to rise again, and it's the emerging growth we're starting to see in data. Although there's quite a bit of diversity across the country. Housing market confidence seems to have turned a corner, supported by rough peak for mortgage rates, high net migration flows, a solid labour market, easing credit conditions, a growing expectation that National may lead the next government with more property-friendly policies, may well be playing a role here too.